All right, guys, welcome to another Byte Federal podcast. Joining me today, Eric Yakes. Eric, how are you doing, buddy?
I'm doing awesome, man. I'm excited for my first Byte Federal podcast.
We're excited to have you. I've always enjoyed your work. You're a smart dude. I think if it wasn't for you, I probably wouldn't have the Bitcoin following that I do because you blew me up on Twitter back in El Salvador last time we were there.
That was the most hilarious thing. Yeah. For context, everybody, the first time Paul and I met, we're at dinner in El Salvador, and after a few glasses of wine, I think I was just like, "Hey, man, you look too much like Tom Cruise. We gotta put a picture of you up." And I took this. We took a few pictures, and one of them was with like your profile, and we're like, "This is like the perfect angle of like Tom Cruise looking Paul." Posted it, went viral. I think that got like 8,000 likes or something.
Yeah,
that really took off. And everybody was coming up to me around El Salvador that like over the next few days, like, wait, were you the guy that was with Tom Cruise? Like, it was so funny.
You totally orange pilled Tom Cruise. You were on the money, man. That was great. I had a good time with that. And now every time I post something, it's, I get the Tom Cruise Cruise Bitcoin comment. So, but I had a great time with you. Rieger was there with us. And I think between you and Michael, my glass never went empty that night. So thank you guys for a great time. It was awesome. Well, look, if you don't know Eric yet, I want to spend a little bit of time so you guys can hear his backstory and a little bit about his book, The Seventh Property. And then I wanted to jump into his investment policy statement that he wrote for his VC firm. And I think the pretext about where you came from will kind of lead us into Epoch. But so for our audience, if you give them a little rundown of your Bitcoin story, how you found Bitcoin, and what you were doing when you found it.
Yeah. Oh, so I was always when I was 18 years old, I got very interested in economics. I kind of have always viewed economics as it's the most measurable type of philosophy that we really have, and I was always a very philosophical thinker. And that hooked me at an early age. So like when I was in college and I was getting my Keynesian economics education, I was reading on my own over, Christmas break and over the summer and reading other economists and finding those perspectives. I encountered Bitcoin when I was in college, but when it was described to me, it was like a blockchain technology. I wrote a paper on it in school saying it's a speculative investment with no fundamental value. I also I double majored in econ and finance, and I later got a CFA. So I had this, long finance education, and you apply this type of thinking of cash flow based assets to it. And I'm like, okay, well, if you're trying to describe this as some sort of technology that produces some sort of value, then, maybe it's worth something one day, but I can't measure it. And that's not the type of investing I do. And I just stayed away from it. It was a while until I actually heard the narrative of like, no, this quote unquote technology, this is actually like an alternative emerging monetary system. And it wasn't until I heard that it really started to hit home with me, because I was acutely aware of all the problems of central banking. I read monetarists, I read Austrians, I read all these different types of econ. And I thought the most pervasive issue was, any sort of intervention within capital markets, and central banking, the way it exists today, is the most pernicious aspect of intervention that's ever existed in history. It's totally inefficient. It destroys the way markets should work. With the way the finance exists today is not how it should work. And so once I understood that about Bitcoin, that got me incredibly interested, and that sent me down the rabbit hole. It eventually led me to a point where I wanted to jump into the industry, and that was a hard decision. I was working for a private equity firm at the time, and basically my experience in the finance world was kind of at the other end of the spectrum from early stage investing. I worked for a restructuring firm at my first job, and then I moved to this private equity fund that specialized in buying companies that were declining or in challenging situations and turning them around. Kind of like flipping houses, but just with companies, and it gets really complicated and nasty. Throughout that, I got a ton of exposure to all this malinvestment that exists, and a lot of things that we would look at are these companies that are still alive today because of cheap credit, but for all intents and purposes are not profitable companies. They're not good companies. They probably will never become good companies. And this credit environment allows them to exist and just keep rolling over their debt. having all that exposure made it very obvious to me all these issues. And I think when I was kind of in this industry, I was like, okay, a lot of the investment that's happening is really not creating a lot of productive capital within society. And it didn't really get me excited. I didn't feel like we were doing something that was, changing the world by any means. It was a profitable business to be in. I understand why it exists. But I wasn't passionate about it. And eventually I got to the point where I was just like, dude, all you think about is Bitcoin. You should be working in this industry. And yeah, so I made the jump, and during the pandemic, and when that's when I wrote the book, The Seventh Property. And the logic of it was that, I think the only Bitcoin book I've actually ever read was the Bitcoin Standard. Mm-hmm. And at that time I'd read the Bitcoin Standard, and I was like, okay, for people from my world, people who are like from like kind of like private equity hedge fund world, they don't care as much about like theoretical economics as much as they care about pragmatic argumentation of here's what we know. Like, and I don't really care about your idealism. I want to make money. And I tried to write it from that perspective of being as measured as I could, not be as idealistic, and say, here's the tangible arguments. You need to understand how money works. You need to understand how banking systems worked as well. That was one of the big things that I thought was missing from the Bitcoin Standard. Is to understand fiat money today is you really had to get into how banking systems actually worked. And that's like the first half of my book of just like teeing up the problem. And then the second half was discussing Bitcoin. And one thing I wanted to do is get a lot deeper into explaining it. It was, the Bitcoin Standard had like a kind of like cursory overview of how it worked. But I was like, for me to understand something, I had to get to a certain level of depth around it. It didn't have to be like a developer textbook. But I wanted it to be something to where there's a few important aspects about Bitcoin. How the network is structured, how mining works, how proof of work works, things that show here's how the incentives of the network are aligned. And I think understanding those in depth is really important, as well as just understanding generally the security of cryptography, because that understanding those things well really helped me get my head around like, oh, this is like this unstoppable network and nobody's ever going to be able to change this. Once that clicked for me at a technical level, I was very gung-ho about everything that was going to happen. The whole idea of like, is the government going to stop this thing or blah, 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 that became this very low risk in my mind. So that was also the rationale of the second half of the book when I explained Bitcoin, is I wanted to get a bit technical in that explanation. And then basically that gave me my thesis on the industry and what I viewed. And it took me a few years of working with companies, talking with founders, until I eventually decided to start Epoch, a Bitcoin venture capital fund. And we're still in the building phase, but we've done our public launch and we plan to be up and running by the end of the year.
Oh, that's great. Well, I can tell you just my personal opinion with your book, The Seventh Property. You did exactly what you said you did. Take this bigger Bitcoin philosophy and root it in rational analysis of and did it in a very simple way, like technically how we're going to change the system and how that follows these Bitcoin values or this Bitcoin philosophy. Because I'll be the first one that'll spin off into philosophical wonderland, and but for you to bring all those back to a functional reality in such a simple format and such an easy read, I thought it was awesome. So kudos to you. And I think anybody who hasn't read it, you can get it online. You can go to maybe tell people where they might be able to download the book and get access to it, because I think it's really useful in orange pilling people.
Yeah, you can buy it online on Amazon. There's paperback and hardcover, Kindle ebook. There's an audiobook by Guy Swan. You can find that on Audible as well as other platforms, I think, that support audiobooks. If you're German, there's a German translation through Apricot Media. And I also have a free PDF online on my company's website that I felt it would be good to open source a book for the world.
Mm-hmm. Yeah, I think there's really, I don't think there's a book out there that's better for quickly orange pilling people. I mean, especially people from TradFi. I spent a bunch of time as a wealth manager, and this just gets to the root of the problem quickly and efficiently. A couple more questions about TradFi before we go. In the space of private equity, was there a lot of pushback amongst private equity? I kind of took private equity to be more open-minded about things like Bitcoin, but is that the case or not?
I mean, in my world, it was just something that nobody looked at or cared about. Like, I
Mm-hmm.
always stuck out like a sore thumb in a
Mm-hmm.
private equity environment, being a guy who was interested in economics. Um, it's not something that most of these guys are thinking about. Most of these guys are just
Right.
general businessmen
Right.
that are focused on, you know, different financial metrics of companies. They don't really focus a lot on anything macro. Like you could go talk
Okay.
to some really successful private equity guys, and I bet that there's a lot of them who aren't even keeping up with what's happening with Fed policy. It's just kind of like
Mm-hmm.
kind of a different world.
They're in the
Whereas,
weeds with the company and how they're going to fix this company or how they're going to finance this company.
right, it's a lot more surgical type of
Uh-huh.
investing than when people think of traditionally like a hedge fund, where it's like what's happening in broader markets. That's a much more
Right.
macro focused investing thesis. Whereas we're more like surgeons.
Gotcha. Gotcha. Okay. So yeah, guys, I really highly recommend you check out the book, and let's go into our next section here. And I want to start with some excerpts from your conclusion. Right, this is your. It says, I guess this would be your investment policy statement for your VC firm, Epoch, correct?
Yeah, I wouldn't call it an investment policy statement
Okay.
necessarily, but it's more of like a philosophy. It's more of
Okay.
how we view the world, and what we think about this industry, um, and and I think the intention of the writing was to really fundamentally build that philosophy in the first half, and then in the second half, there's a few major questions that I think everybody who's like,
Yeah.
if I'm going to invest in this type of private capital around Bitcoin, here's these primary questions. We wanted to hit those head on. I feel like a lot of people try to dodge these, and we're just
Yeah.
like, no, let's give them the best answer we can give them.
Yeah, you did it, man. This is again, you're a great writer because it took these Bitcoin philosophies, these crypto thoughts, maximalism, and just drove it all into like a rational approach to investing in the Bitcoin market. So again, I just love your writing. You did an excellent job. So I'm gonna pull a few phrases out of your conclusion, and then we'll kind of come back and kind of work through this piece and
Mm-hmm.
hopefully educate people on your thoughts here. First and foremost, and this is kind of primary, I think, for everybody who's in Bitcoin, is that the success of Bitcoin as a neutral global monetary system will be the most important innovation in our lifetime, bar none, right? Separating money from state, all the high level philosophies of Bitcoin are sort of the driving motivation. Then you go on to say that you identified three sequentially dependent cycles of Bitcoin adoption, and I loved the charts that you put out on this across three monetary functions, right? Store value, um,
Medium of exchange.
medium of exchange, and unit of account, and as adoption cycles. And I thought that, just as simple as that might seem after you read it, organizing it the way you did, I thought was brilliant. Um, and then Bitcoin marginalism, or Bitcoin marginalist. We'll get into that in detail because I think this was a beautiful insight where you consider both supply side and demand side to develop a realistic and differentiated view of value and growth over time. Marginalism asserts that participation in the Bitcoin mindshare on the margin is better than passively ignoring developments. Well said, right? Oftentimes I hear this in the Bitcoin circles of like it's inevitable, it's going to win no matter what. And then there's a lot of us that are like, no, we have to build the future we want to see. And I think you again described this process in a really rational way. And then lastly, we do not maintain passive indifference to controversial topics within the Bitcoin ecosystem while believing that the market will solve everything. So I guess that's kind of fine tuning on that last point. So let's jump right into the beginning of this, which is Bitcoin versus crypto. And because I think that sets up the discussion for Bitcoin marginalism or marginalist. And so maybe tell us the way you're thinking about the combination of Bitcoin maximalism and crypto agnosticism, as you called it.
Yeah. I'll caveat everything I say after this with there's a lot of different definitions to different people of what these words mean. I try to define in the paper of how to really, how we're thinking about it from this perspective.
Mm-hmm.
But there's a wide spectrum of people that are Bitcoin maximalists. There's a wide
Yeah.
spectrum of people I've met within crypto. And so with that understanding, I think the idea is that we had we had the system emerge. We had Bitcoin emerge, and then we had competitors emerge or competing or alternatives, or there's different ways of viewing it. But as this system started to grow over time, there's been different forms of doctrine that have effectively emerged around it, different cultures, different perspectives of, whether it's developers, whether it's investors, whether it's miners, stakeholders in all of these different ecosystems. And a lot of people have tried to, categorize what those cultures are. Mm-hmm. Bitcoin maximalism, started by Vitalik Buterin, is a term that was, intended to be more of like an insult of people that are, hardcore ideologues that are resistant to change in different ways. And if you look at the history of Bitcoin, you can see the value in that type of mentality. I think a lot of people try to view these cultural distinctions in a very black and white way. And that's just something that's never made sense to me. I've never understood that you could look at different cultures within Bitcoin and crypto and, come to these like conclusions about people. It's just something where I'm just like, yeah, I mean, look, I go to different crypto conferences and there's scammers everywhere. I see these like sycophants that are walking around and, like saying a bunch of words nobody understands that they don't understand either and try to sell people crap. Like, that exists in a very pervasive manner within those cultures because it's a much more open-minded culture. It's much easier to take advantage of people in those situations. It attracts that type of personality more. There's also a bunch of really brilliant guys who see who find really interesting technological innovations that have happened. And there's also guys who are just not interested in monetary economics at all. They're purely like developers who like to toy with interesting types of protocols and applications, etc. So there's this wide spectrum of people within that group. Same thing with Bitcoin maximalism. There's angry people who don't trust the state, who might be partially autistic, who will never trust anything in their lives. There's very brilliant people who are well-versed in, economics, and they understand the reason that Bitcoin maximalism has existed, why the block size wars occurred, why the immutability of Bitcoin is such an important property to maintain. And they're capable of arguing that with people who are trying to go against it. And, all these other different people that are involved in these groups. So what I wanted to do is take a step away from like, okay, so we have all these cultures that have existed within Bitcoin in different almost philosophies. And it's like, okay, so if we're starting a venture capital firm that's investing around this, what's our philosophy? How do we think about this? And the parallel that I've seen with that was always kind of in the back of my mind that I try to capture in this writing was as these cultures emerged and as the thought around this industry developed, it's very parallel to how the theory of value actually developed in economic history. Mm-hmm. And that's where this term marginalism comes from. So that's what I try to describe in the paper, is that there was this initial view of value that we had. And that was like, this was kind of at the dawn of economics when the classicism emerged. That was like the prevailing theory. This is what thinkers like Adam Smith and David Ricardo, Jeremy Bentham, like very famous names, were all a part of. And the pervasive theory of value at that time, which we've probably heard a lot in Bitcoin, was the labor theory of value. And the belief was that labor is the primary input cost because these were agricultural societies. And like, that's their perspective on cost of labor at that point for most of what they were creating. It's a primary cost, and value is primarily driven by how much labor goes into something. And Adam Smith posited back then, a lot of these guys were like, look, this is what we view as the theory of value, but there's certain things that we can't reconcile with that perspective. Adam Smith had the famous like water diamond paradox, where he's like, well, why is it then that diamonds are so much more expensive than water when water is something that people demand more? And they're trying to reconcile this with the view of labor theory of value, and they never really could. And then, so, this was a view that went on for centuries. And then we had these two conflicting, as Marxism started to emerge, we also had marginalism as a school of thought that started to emerge. It was kind of like the offsetting view. And marginalism was kind of like the next evolution on top of classicism, where they were like, okay, well, or sorry, it was not as much of like the next evolution on top of, but it was more of a response to classicism, where they're like, okay, so you guys view everything, all value deriving from like the cost of the inputs and like all these supply side considerations that happen. When the reality is that value is totally subjective, and how much people pay for something in a market is really how much demand there is for it. That's based on subjective views of the world. You know, what are my tastes and preferences, and what do I need to survive? I need water to survive. Okay, you know, I need protein. Okay, I prefer burgers in Europe, and that's why it's demanded more here, and that determines prices, and that's where value comes from. So is this response that kind of swung to the other end of the spectrum, and that was really interesting because it was later on in the marginalism revolution uh, that thinkers started to come and say, no, it's actually both of these things. So at the beginning of marginalism was like very famous Austrian economists, Willy Jevons out of Europe, and then Karl Menger, who's considered the father of Austrian economics. They were the guys who kind of viewed the subjective theory of value. Uh, and then it wasn't until later on when Thomas Marshall came about, and he was just like, no, value is something that actually requires both supply and demand side considerations. It's the cost of the inputs are a constraint on how much of this is actually produced, and the subjective value of it determines whether or not people care about those cost of inputs in the first place. And that's where supply and demand charts came from. And he was the first one to describe both of these theories of value in tandem. And then they said, okay, not only is it about the two forms of value, but it's about how much it exists at the margin. So how much supply exists of something today and how much that fulfills the current level of demand for it determines what the price is actually going to be. And that's what kind of solved that water diamond paradox that Adam Smith posed of, yeah, sure. I mean, diamonds are more expensive than water right now because water is so abundant from a supply side understanding. But if all the water dried up in the world tomorrow and just 1 unit of water appeared, it would be the most valuable thing on earth. So depending on how much exists in the supply determines what it is. So these two ideas, looking at value from a marginal standpoint, meaning it's constantly fluctuating over time based on supply and demand considerations, as well as looking at both sides of supply and demand, it basically changed how we viewed microeconomics. It changed everything that emerged from then on. A lot of what we're taught in textbooks today in econ kind of emerged from this marginalist revolution. And that's something that I've always seen as kind of parallel to how thinking has emerged within the Bitcoin and crypto world, where Bitcoiners who were hardcore maximalists were kind of like this classicist viewpoint. Crypto swung to the other end of the spectrum of like, no, it's not about the supply. It's about how much utility all of these things provide. And the more programmable it is, or the faster it is, like that's the most important thing. And I think where we've come out to is no, Bitcoin's supply side constraints are paramount to achieving this monetary revolution. And without this, we kind of undermine the entire value proposition of this industry. We need we need a highly scarce, immutable monetary asset underpinning all of this. It's decentralized enough to be permissionless against any sort of authoritative action. Need that, full stop. And given that, there's also a lot of valuable things that can emerge and provide utility from a demand side as well. There's an entire ecosystem emerging around Bitcoin that's going to be providing that. And the value of that is going to be, we're going to be assessing that on the margin as things change and as new things are created. Some things might be valuable today that aren't as valuable tomorrow. And as investors, we kind of want to be looking at it from that perspective. So like, that's the whole view of like how we think about the philosophy on this industry and how it's very parallel to how thought has developed in the past.
Yeah, I think that because I've always felt that like what's happening in crypto is interesting. But at the same time, I've always felt like unless it's rooted on Bitcoin as the base layer, then all we're ever going to get is Wall Street 2.0. We're just going to get, instead of, options contracts, we're going to get smart contracts, right? And so to me, it's really interesting what's happening in crypto, but it's not the innovation. The innovation starts with Bitcoin, and then building these layers from that foundational structure of removing money from the state is why I consider myself a Bitcoin maxi. But I was never so much a maxi that I came to the conclusion that nothing ever good was going to come out of the crypto space. I always thought There's a lot of interesting innovation there. For sure, something innovative will come out of that. But for the most part, I saw the scams, I saw the
Yep.
corruption, and I saw some interesting tech that was just slightly iterating one next level up from Wall Street.
Yep.
So you're on the same page.
Yep.
So let's transition this then into the adoption cycles and how you laid out store value, medium of exchange, and unit of account as 3 different adoption cycles. Because to me, that clarified everything. I've always just in my own rudimentary way been like, taking Bitcoin as payment, it's just too early to do that yet, because right. But you defined it in a way from an investor's point of view as to why those cycles and the timing of investment in those cycles, the development of product in those cycles is so key. So I want to transition that this chart that you had in here, and I'll see if I can pull it up, which was the 3 different cycle, the 3 different S curves. That was so cool. This one right here, which I know you're familiar with, and we'll put that up on the screen for everybody. Let's talk about that, because it is really interesting how, and I think it just intuitively made sense how store value phase, which we're in right now, is such a big phase and so important to developing the next phases. And I think a lot of people in crypto and the big block wars was about like, no, we need to jump right to unit of account as quick as possible in order for this to be successful. But you really lay out a case why jumping there too early is going to create issues or failures, especially for the companies trying to do that. So let's maybe talk through these 3 different phases and why one is so important for the next one to be successful.
Yeah. You hit the nail on the head. Like, a lot of these crypto protocols that have tried to jump towards this like unit of account, medium of exchange type functions out the gate, it's putting the cart before the horse, and because of that, they have ended up undermining a lot of their value from moving prematurely into some of these other functions. It's kind of interesting that I didn't really call it the papers. I've always viewed that as very similar to actually kind of how the fiat dollar has emerged. It emerged, it had to get there by being a good store of value over time. But once it was so deeply entrenched as a medium of exchange and unit of account, that's when we were actually able to undermine those original store of value properties that made the dollar so valuable and dominant in the world. And now it's so deeply entrenched as a medium of exchange and unit of account, it's very hard to reverse that. And I feel like crypto was trying to go after a similar strategy.
That's a really good point, because we're actually at this precipice in history, right, where we're seeing the erosion of the treasury. We're seeing the store of value be eroded, but greater adoption of unit of account through USDT, USDC, spreading the dollar globally. That I never thought of it from that angle. That's really insightful. Unit of account could persist for some time, even though store value is starting to deteriorate in the dollar.
Right. I mean, it's just like the dollar, once it's denominated in the majority of global contracts, it has the deepest and most liquid capital markets surrounding it. It just becomes very hard for anybody to de-dollarize over time. It's very impractical. It's very costly. It's very risky to find an alternative.
So back in Nashville, right, we heard so much about Bitcoin becoming a part of the U.S. Treasury. So obviously people, the powers that be are starting to look at Bitcoin as a store of value that's going to support the Treasury. I think that's their thinking now, but eventually, obviously as a Bitcoiners, we're thinking that's going to just supplant the Treasury. So you see a future then where Bitcoin becomes a store of value that then the dollar is the unit of account that's riding on top of that, at least sort of as an intermediate phase?
Yeah, potentially as an intermediate phase. It's, I don't think anybody has like a very clear view. I like the way that I currently view the world from like a spectrum standpoint of the future of Bitcoin is I think I view the worst case scenario for Bitcoin as digital gold 2.0.
Right.
I think that there's a large percentage of the market that's factoring in some sort of probability that Bitcoin fails at this point. And I think that's misguided. I think that it's not really going to fail at all anymore. The worst case scenario is it gets like captured as a form of digital gold asset. It's like controlled and custodial services that Wall Street's like selling products around or something.
Right.
and best case scenario is a completely neutral, Bitcoin denominated global economy at the other end of the spectrum. And like, yeah, we could have these dollar interim periods. And I like when people ask me in meetings, where do I see Bitcoin over in 10 years? The answer I've come up with is I think there's going to be some sort of consortium of emerging market economies that are conducting trade and settlement, maintaining a significant portion of their reserves. El Salvador was there. Some of these African economies that are looking at adoption are coming. There's more Latin American economies we think are on the fringe. I mean, when's Argentina going to fall? And a lot of this is going to build momentum towards a neutral settlement form of collateral that's going to start to make a lot of sense amongst them, where they're going to be like, why are we doing this in dollars right now? We all have Bitcoin. Mm-hmm. And it's going to make a lot more sense. So like, I see that starting to happen. And like, that's probably still like store of value phase type functionality, using it as like a sovereign reserve, using it to settle collateral. You can argue that it's a little bit like medium exchange, and the semantics really is what's important. And with this 3 different phases of the functions of money for adoption, it's illustrative of how to think about things and helps people kind of like frame the forms of adoption. But the primary point is that the store of value phase is going to be the most important thing towards leading towards adoption of everything else. When we're looking at businesses today, there's a lot of medium exchange type businesses. It's not to say they're not valuable. It's not to say that they can't be good investments. But generally speaking, the majority of the value we expect to fall towards businesses that are supporting Bitcoin as a store of value. We think that there's a lot of room for growth within that market before people start really using it as a medium exchange. And by the time it's going to be medium exchange adoption is going to be very obvious once it has captured the store of value market. Because the point I was just making, we're going to be in a position where it's like most people have Bitcoin. Mm-hmm. And then all of a sudden it's going to be like, yeah, settling between us is going to make, I have Bitcoin, you have Bitcoin. It's going to be a massive market. The price volatility is going to go down as like credit markets around it start to mature. We have more passive buyers. That is one of the major benefits of a lot of these financial products that are emerging around it, is I think like passive, consistent, long-term flows of investment are going to be more significant through this over time. And like all these, complexities are coming together to basically mean it's just becoming a better store value over time. And as people own it, it's going to be so much easier to make that transition to medium exchange. And once everybody's trading in it, all of a sudden, well, why are we denominating our trade in it? And I think that this process comes over multiple decades, and it's going to take a very long period of time. It's hard to really say what the timing of all of it's going to be, but I hope that I'm wrong, because since I've been involved in this industry, things have always happened much more quickly than I ever would have expected. Right. To think that we would have, presidential candidates running their platforms on it this year. Like, never would have guessed that would happen domestically in the US. I would have thought that had been more of like an emerging market thing for a long period of time. Yet here we are, and things are moving quickly. So it could actually be much more quick than we'd expect.
So in this adoption for store value, do you have in your mind sort of a metric as like what percentage of the global population we would be getting to as far as ownership, where we're kind of at the top of the S curve there? Have you gone that deep on it?
It's one of those things where like we could try to quantify it as much as we want. It's hard. It's really, going to be hard to say exactly what it'll come out to. I think that there's different like market sizes that we can look at. That a bunch of people have attempted to quantify if, Bitcoin is capturing and demonetizing store value functionality across all these other asset categories that exist today, not just gold, not just silver, but equities, credit markets, all these things people are using as a store of value. If it captures that, then it could get to, this size. And maybe it's somewhere in the middle. We don't really know. What I know is that, to your point about like population, it seems like it would be significant, right? Like it seems like if I imagine a world in which 50% of the population in the US owns Bitcoin, now it's a majority. Now it's most people that you're talking to are participating in this economy. It's not something where, every time you bring it up, you have to explain it to them or you have to give some opinion on it or debate it. It's this thing that's kind of just like cultural, the same way that like people are getting a credit card at a certain age and people get a cell phone at a certain age. People buy some Bitcoin instead of, buying stocks on Robinhood. Like, I think that we're going to get to a point where it's going to be something like that. Maybe that number is 50%. It's, definitely around there.
Right. It's interesting if you think about sovereign adoption, or sovereigns beginning to use Bitcoin as the store of value, how much quicker that ramps that up. And then I start to think about sort of like, I take the way that BRICS are settling their currency trades in gold and start, I think that would probably be the next phase of Bitcoin adoption at the sovereign level, is if we now have Bitcoin as a treasury asset, does it start to force them to think about managing their currency relative to their Bitcoin treasury?
Yep.
And then that in itself, in my mind, would be a massive win for humanity. And I think it is the way that just even if we just one store of value, the better outcomes we could have for humanity.
Yep.
But it's obviously just, to a certain degree, it would be sort of like we've only achieved a third of our growth, right? Or a third of our growth potential.
Yep.
And so how do you see then this next phase, medium of exchange? Is it purely driven from people have acquired enough Bitcoin that they're now telling the world, I want to spend this with you? Because I do that with Bitcoiner friends, right? This weekend I went out and bought some exercise equipment from a friend of mine, and I paid him in Bitcoin because he's a Bitcoiner. I tried to tip a friend the other day who did some work for me in Bitcoin, and he's like, I don't know. So I had to show him how to download a wallet, and he let me into his Coinbase account, and I saw that he owned a bunch of shit coins. I was like, what are you doing? I've been talking to you about Bitcoin for freaking 8 years, and now I get into your wallet, and I'm like, I'm shocked. You haven't done anything I asked you to do. But and he didn't even know how to accept a Bitcoin payment, right? So it's sort of like it's shocking how far you have to go down the rabbit hole, right, before you start to think a medium of exchange. And I'm wondering if you guys have put some sort of thought into, like, when does that become rational for a VC to invest in that phase? Or what kind of metrics you're looking for before that becomes interesting? Or maybe you're already thinking far enough ahead that you want to plant seeds there. I'm not sure.
That's a great question. I think that there's plenty of things we could look at in terms of, like, payment volumes and adoption that exist and how that's trending over time, and looking at different types of users and different markets and saying, what are the habits of these users? Why are they using it? And so you can look at all of that preemptively. You could say, like, okay, it's coming in this direction. It's like, today, it's what's the best use case for Bitcoin? Holding it. Mm-hmm. And we have a ton of data that supports that. And our expectation for why that's going to continue is that I think you don't need to have, like, a ton of data to reason intuitively that people want to hold Bitcoin because it's going to go up in price. And until that's one of the key aspects I think that we're looking at. I think that that's also a key aspect that makes an argument for investing in Bitcoin businesses in the not too distant future, is that it's going to be this very high growth economy, but there's going to be diminishing marginal returns to investing in Bitcoin directly. Mm-hmm. And the question is how many more cycles do we have of, Bitcoin going up 10, 20x within a matter of years? We don't really know. If it becomes a global neutral monetary system over the next 40, 50 years, then it's probably going to have very, very high returns. My belief is that a lot of that's, if there's going to be certain inflection points, which is why we describe these adoption cycles as S-curves. It's like there's going to be a few inflection points for the asset. And each one might be a little bit less than the last. I think store value is probably going to be the biggest. And that's going to capture quite a bit of how we're using it. There's a bunch of complexity I can go into around why I think all of that. But in any event, I think as long as the incentive is that I would view the inflection point towards medium exchange is once a very broad set of assets now that are investable by the majority of the population are now coming in line with return expectations of Bitcoin, that people are going to start investing in those for pursuit of risk, using Bitcoin as a store of value in the near term, and then spending it more effectively. Um, but I know that every time I spend from my Bitcoin wallet, there's always that the opportunity cost of capital on that's going to be incredibly high to me over time, and I try to avoid that. And until that starts to change, I think we'll see store value phase continue.
Right, because it really it ties right back to Gresham's law, right? If you're going to spend the weaker currency first, and so there's always that. I mean, when I go into my wallet, I'm like, credit card, cash, Bitcoin. Well, let's use the credit card first. You know, if I have to, then cash, and then lastly, if I'm spending Bitcoin, it's because I just want to support another Bitcoiner. You know, so
right, exactly.
At this point, when you start to do just the internal mental calculations, it would seem rational to me that you wouldn't really start spending your Bitcoin in a big way until maybe the sovereigns are forced to manage their currency against Bitcoin, or like you said, the CAGR on Bitcoin gets down somewhere closer to the inflation rate. Then you're kind of like, well, I'll go either way. This is the easiest, most seamless. I'm earning in Bitcoin. I can pay out in Bitcoin, kind of thing. Before we get there. So you feel similarly.
Right. Yeah. Because like today, people still view, like, it's not that I don't believe Bitcoin is a great form of long-term savings, but how the market perceives it is it's an investment. This is a risk asset to the vast majority of the people that own it. Very few people are like, okay, I'm going to use this as a form of long-term savings, and I have enough alternative sources of capital to where I can, suffer through those short-term volatility risks. It's a very like developed world economy perspective on what Bitcoin is. Most people can't financially insure themselves to like suffer volatility. So it's something where like, that's just going to exist for a long period of time. And maybe it's 5 years, maybe it's 10, maybe it's a lot longer. I don't know.
Yeah, that's interesting, because I think as Bitcoiners, we that have gone through a few cycles, you immediately start to think about all these other things that Bitcoin's going to be used for, and you want to build for that future.
Right.
But man, it's like when you come back down to it, and when you have these conversations with people that don't understand Bitcoin yet, you're like, holy smokes, man, we have so far to go just on store of value still.
Yeah.
Yeah, I mean, $1 trillion, 1.2 trillion, whatever we are now, it's a drop in the bucket still.
Totally. Yeah. And one use case that we think is really interesting today is just Bitcoin being used as a form of collateral during the store of value phase. Using it as collateral and using it as a network to move collateral is there's a lot of valuable businesses that can be built around that, like the remittance payment market and lending markets on top of it.
Right.
There's a lot of valuable businesses that we see around.
Sure. I'll use exactly that. When I pay people with Bitcoin, I'll convert dollars to Bitcoin, use those rails just to deliver it quickly and efficiently. It's not like I'm going to reach into cold storage and send you Bitcoin I've held for years, right? I'm gonna buy it and instantly send it to you. So
there's no more efficient way of moving collateral trustlessly today than the Lightning Network. Right. The Lightning Network is far and away the most superior way of moving collateral compared to anything else.
Yep, absolutely. Totally agree. So unit of account, that's probably way off in the future here. Are you guys looking at investments in that regard at all right now? Too far in advance?
No, I mean, I kind of view like the primary unit of account phase is once people start denominating capital markets in Bitcoin. That's when the majority of value that exists in the world is going to start settling in Bitcoin. Once that starts to happen, maybe it's at a sovereign level. That's when things get really crazy, and that's when people start to think about Bitcoin from the infinity perspective in terms of its value.
Have you had any conversations or listened to Maya Parabo from Suriname at all?
Oh yeah, we met. Yeah, okay. I haven't listened much to her.
Because my understanding is that if she became president, she wants to throw Suriname directly into medium of exchange, unit of account, the whole ball of wax. She wants to make it their currency right off the bat.
It'd have to be, I mean, if she could make it completely circular.
Yeah.
Within the country.
And my understanding is because they have like gold is largest export now. And from what I understand, there's massive oil reserves that are about to come to market.
Mm.
So if she wins, she could be the first sovereign that'd be pricing gold and energy and Bitcoin.
Right, right.
That could be an interesting check mark in the adoption cycle, right?
Right, right. Yeah, that'll be a great data point for us.
Yeah. Yeah, interesting stuff. So I want to get back to marginalism again, because I think this is a really interesting discussion and what is kind of a typically heated conversation with Bitcoiners about how tokenization, security tokens, utility tokens, government tokens, stable coins, how they all come together around Bitcoin as this decentralized monetary technology to drive adoption. I wonder, and so you talk a little bit about that. Yeah, I know you're not investing in the token space from what I've read directly, but it does seem like tokens are somewhat driving the demand side against Bitcoin's supply constrictions, right? So how do you see that world? How do you see them working together?
Yeah, yeah. So I mean, a token itself, like if we just take a step back, we clear our mind of all the what's the word I'm looking for? Presuppositions that we have about what this is, what a token is, and why it's bad or why it's good.
Mm-hmm.
Like a token is a digital signature. It's a cryptographic structure. It's what Bitcoin uses to make Bitcoin. There's all these other things that are associated with that technology when applied to Bitcoin that make Bitcoins valuable. So the same argument can be applied to a token. It's like, well, what is associated with this cryptographic signature? Like the technology itself is it's just cryptography. That's all it is. It's being used to create markets, and we're kind of witnessing markets emerge on other blockchains around it, and some things related to Bitcoin, but not as material of a way. And it's like, okay, well, what is the value based on these tokens today? Is that sustainable? And what do we expect it'll be tomorrow? And it's like, I view it, I don't even view it as some sort of crazy technological revolution. People are like, let's tokenize everything. Let's make all securities. Let's make all of these things, tokens. I think the primary reason people want things to be tokens today is that it creates more access. It's like, why do people want to go use a decentralized exchange on a DeFi app? It's because they have access to assets that they wouldn't otherwise. And then the question is, well, in order for that to exist within a regulated financial world, will those assets be allowed to exist at all? Or does this have to truly only exist as a decentralized, uncontrollable, permissionless thing? And that's a growing thing that we're seeing. And it's just like, okay, well, if it has to be regulated, then do people care? Because if it has to go regulated, now it's a lot more expensive. Now these things that people wanted in the first place don't exist. And it's not that I'm saying I'm a proponent of certain regulations or not. Just making the argument that a lot of it's more about certain assets existing, and a lot of the demand functions of this we view as either very short term or based around just gambling and speculation. And it's not some sort of technological revolution.
Relative to security tokens, right? Because I agree with you, right? A security token is just a cryptographic stock certificate.
Yeah.
The way I'm looking at it.
Yeah.
But so to me that's in and of itself not that interesting, but where I do find it interesting is when we can remove then the custody of that security from Wall Street and put it in the hands of the individual shareholder. Because and then perhaps have a registry of all the shares on some blockchain, right? Because there's so many games being played in financial markets. GameStop is the best example of it, right?
Yeah.
Where there's X percent more shares sold short than are in existence, and that is being done, seemingly without oversight, seemingly without repercussions. And so and it's destroying the value of a lot of these small companies, and it's just allowing some of the traders to just extract that value from companies that are even doing good things.
Yeah.
So I see the value in security tokens, um, but I see huge regulatory moats that are there to protect the people playing these games that need to be broken or dismantled before we ever get there. Are
Right.
you thinking about
Yeah.
the same way?
Yeah, exactly. And it's just like, I think if you see the writing on the wall in this industry right now, it's like, yeah, that's exactly the case. It's like if we did have these open, accessible secondary markets where we could maintain self custody of, security assets, and we can verify those on a public ledger, that's a great vision. We're excited about that kind of a vision. Um, but how it exists today, it's like, well, what's really happening? You have this partnership between BlackRock and Coinbase, and they're the custodial provider of the ETFs, and then the Coinbase has recently launched Base, a DeFi quote unquote layer 2, which is just a centralized sequencer server controlled by Coinbase, and it's running all these applications, and people want to use it because it's DeFi or whatever. But really, it's not that, based on the narrative. And then they want to have this partnership with Securitize to issue securities on Base. And it's like, well, what are we doing here? All we're doing is we're shifting the power of security issuance from Wall Street to Coinbase. It's going to be the same problem, just replicated with a new centralized provider. And it's not as if the narrative is true. So like, that's the big issue, is that there's a lot of narrative out there. There's not a lot of actual reality. And then where the DeFi protocols that do have adoption exist, they're running into a lot of issues. We'll see how persistent it is, and there's a ton of regulatory risk around that today, at least doing it domestically within the U.S.
Right.
So like, I guess like the big way that we look at, like, we don't have anything against like a token conceptually. It's just, as an investable asset today, the biggest thing is that the majority of the value of these things is based on having some sort of monetary premium within the protocol. Right. That's something we view of eventually Bitcoin just going to replace that. All these protocols that have like utility tokens or whatever, like some sort of network token, that should just be Bitcoin. And the only reason they want to do that is because it's a lot cheaper for them to use inflation themselves to have people pay for that inflation that are owners of the token, the protocol. That's not sustainable over time in the long term. And you see a lot of token charts where, they approach zero because of that. We don't view that as like particularly innovative. It's actually kind of the same problem that like fiat and fractional reserve create, of trying to extract seigniorage, which is having something that's costless to produce but generates revenue. That's the incentive for fiat and fractional reserve, is being able to tax a group of stakeholders through inflation. We kind of view it as a very similar thing. So like, that's something I'm against. There's a ton of protocols that are doing that. There's some that are fraudulent in that regard. There's also kind of like a misalignment of value accretion. There are these ideas that like, okay, it's not just security tokens. It's like, we basically take any contract, right? Like revenue sharing, loyalty programs, governance, and then tokenized equity. We can take all these types of, that's what equity, debt, all these things are. They're just different contracts with different functions. We can take all that, we can replicate its value accretion with token functionality. I think the reality is that you don't really see that value accretion in the market. There's actually pretty strong misalignment of it. And I think that's because so much of it's based on speculation. People say you're going to get this type of value accretion within a token, but the reality is very different. And I think the biggest thing is that it's like, if we're talking to a founder and they want to issue a token, that creates these very short-term incentivization problems. And this has been one of the most pervasive issues in broader crypto, is that because you can access public liquid markets, and because you can achieve these, market caps in the hundreds of millions for your, what's de facto equity of your startup, it makes a lot more sense for you to run marketing campaigns and get a bunch of crypto influencers to pump your token than it is for you to build a profitable company. And like, to be fair, this is one of the reasons that securities regulation exists. This is the reason that there's certain standards you have to reach before you can access public markets. And it's not to undermine the reason that the U.S. has maintained the most sophisticated capital markets in the world, and that's attracted so much value to our country because of that. It's not that like, these things are important. I I believe in freedom as well. I think that over the long term, the market should sort these things out. But having some scaffolding around it in the short term isn't the worst thing in the world.
Yeah, absolutely.
And
Yeah, I mean the ICO boom showed us that firsthand, right? If anybody was
yeah,
here listening was around during that phase, there was so much crap that never got built, with
yeah,
billions of dollars being raised. It was just a
absurd,
scammer fest. Yeah.
absurd, yeah. And just taking advantage of like kind of the naivety of the industry.
Yeah.
Similar things happened during the dot-com bubble. You know, all these internet companies that were
Yeah, sure.
completely worthless. Nobody knew what the hell was going on. It's like that today. Nobody knows what the hell is going on still, and they're just buying narratives. And it takes hundreds of hours of research to even get close to being able to look past some of those narratives because it's so complex.
Right.
And we're just watching that shift out. And then the regulatory uncertainty around this, it's kind of like a risk premium. It's like, well, you guys can achieve these same benefits of your token by using traditional contract structures. You can use safe notes. You can use, series equity securities. You can use debt contracts. You can use revenue sharing contracts. You can do whatever you want. And those don't have this like risk premium from a regulatory standpoint that exists around them. So that's another thing that we add to the paper.
Do you think, I mean, when I start to think about these tokens as demand for Bitcoin, the only token I can think of, and correct me if I'm wrong, but the only token I can think of that has actually driven demand for Bitcoin are stablecoins. Am I missing something there? Or do you think, is that an accurate statement?
Well, so what do you mean exactly? Like driven demand for Bitcoin?
Well, I guess it's created an ease, a function, of flow, market volume. The transactions back and forth between Bitcoin and stable coins, I think, have been a net positive for the use of Bitcoin and the market adoption of Bitcoin. Whereas we probably wouldn't have all the institutional players in Bitcoin that we do today if they couldn't have liquidity 24/7, 365. So to me, that's like when you describe this combination of crypto and Bitcoin, I think that's like the first thing that stood out to me as something that actually drove demand for Bitcoin or helped the demand for Bitcoin. Maybe it wasn't directly driving it, but it was helping in that adoption. Are there other tokens that you think are doing similar functions, or do you think stablecoin's really it?
I think in the near term, if you think about it, like having Bitcoin as a store of value and being able to use stable coins to, quote unquote, permissionlessly move, it's not actually how it works, but nonetheless, it's a lot. You could say that there's a lot less friction around moving a stable coin versus other forms of settlement, like US dollar denominated economy today. And so that combination is kind of like how one can exist within this digital world and have store value, medium exchange, unit of account type functions served. And that's going to exist for a long period of time. Yeah, I completely agree. The value that stablecoins have provided. I think the argument that people make against them is that we're just perpetuating the Euro-dollar system into this digitally native economy. I think if anybody's listening to this, I would love to have this debate because honestly, this question has always seemed very simple to me. It's just like, it's not that I disagree with that point, but I think that if you make that argument that if dollars can proliferate in a digitally native system and that's competitive with Bitcoin and that's going to put people on the dollar standard versus Bitcoin over time, you're effectively making an argument that people over the long term will not want Bitcoin. You're making the argument that they'll remain within dollars because you're allowing in the short term today accessibility to dollars within the system. And I just disagree with that. I just think that all it does is it moves capital into the system. Not in the perfect sense does it provide like a permissionless rail for them to move over, but it is vastly easier to move from a stable coin to owning Bitcoin than it is from any sort of banking system type structure. And 100%. Given what's happening in banking systems, I would much rather have it exist in a stable coin because of all this weaponization of banking systems right now. I view that as a positive. I think that if you're making an argument that people won't move into Bitcoin or that the Euro-dollar system is going to hurt Bitcoin, you're just making an argument that people won't want to switch to Bitcoin over time.
Yeah, I agree with you. I also think when I think about dollars and Bitcoin, I see your demand, your supply demand curve in my mind, like they're checks and balances on each other, right? As soon as we get an oversupply of dollars pumped into the system and we get inflation in the monetary system, we're going to watch Bitcoin go up in value and absorb that out of the system.
Yeah.
So to me, it is they're at least initially necessary components of the equation to drive adoption before we can get to a point where we can safely and for the benefit of humanity switch to a true Bitcoin standard. It's sort of like it's that in-between step that's probably going to be an in-between staircase, not just one step, right? To get to the point where we can confidently say, yeah, the world is ready for a Bitcoin standard.
Right. Yeah, I completely agree.
All right, cool. All right, so let's move on. Let's talk about your being proactive in your investment decisions as a way to build the Bitcoin network and build, like, so that what you're investing in, the different parts and the different companies, it sounds like you're being very proactive in regards to building the future you think we should have or you want to see, and applying capital to make that come to fruition. Is there, and I don't know if you could talk about companies you have in mind. I don't know if you've already made any investments at all, but maybe we can sort of break into that.
Yeah, look, the way that we're looking at this is that a lot of like basic financial services are valuable today that are supporting Bitcoin and will continue to be valuable. Things like exchanges, custodial providers, multi-sig, remittance payment providers, lending services, all these different things are really valuable today and they're going to continue to be valuable. Kind of de facto, we're looking at a lot of that. Some of this like cutting edge tech that's like emerging on top of Bitcoin, whether it's, things that are happening within the Lightning ecosystem, eCash, these far out in the future things like ARC, zero knowledge rollups. We're looking at that and it's interesting to us, but I think a lot of it's just more like de facto companies that are increasing, on ramps and custodial services for Bitcoin over time. Yeah, I mean, my point in the paper is just that when people make the arguments, they're just like, TikTok next block, like Bitcoin will handle this. It's like, if we want a global neutral monetary system, like there's a lot more that needs to get built. It's not TikTok next block. And that is why it's so important for everybody to be actively participating in this and to not remain on the sidelines. We are the market. We're the ones creating it. If you're, a big enough of a nerd to be having these kind of conversations, then you're material in this market. There's not a lot of people at this current level of knowledge today around the world. And you can become influential within the world of Bitcoin pretty quickly if you put your mind to it.
You describe your investment process or the Bitcoin network as a tree, right? And investing in sort of these outer limbs that are higher growth than maybe the trunk, which is the Bitcoin protocol. But the trunk is is pretty awesome, right? I think what the CAGR right now is like 53% or something like that. So if the trunk is growing at 53% annually, what are you seeing or what do you foresee in these outer limbs that you're investing in as potential growth rates for some of these companies that are doing it right? Obviously, not all of them are going to succeed, but what are your expectations for companies that are doing it right to get your attention?
I mean, it's definitely going to be really high. Like we want this to, when we're looking at companies, we need to see very strong return potential. And like, it's hard to say if we look at Bitcoin as our opportunity cost of capital, what that's going to be over the next decade. That is kind of like the time horizon in which we're thinking about this is over the next decade. And then some of the businesses that we're looking at as well will like have a lot of exposure to Bitcoin, whether that's through the revenue economics or through owning Bitcoin on their balance sheet, and as well as exposure to different aspects of growth within Bitcoin that you wouldn't get necessarily from just directly owning Bitcoin, the asset. So, if you're looking at different, standard returns within like private capital, then like getting a 2 to 4x multiple on invested capital somewhere within that range would be considered kind of market. I mean, if you look at the area that we're playing within, ventures having some of its first down years within decades right now, and a lot of that's probably because of what's happened with capital market liquidity from central bank policy and rising interest rate
Mm-hmm.
environments.
Mm-hmm.
That's a good thing. I think that's great. There's so much within venture that has just been like ridiculous capital misallocation because of cheap credit and pushing people down the risk curve. So we view that as good. I think that what we're doing is I expect we'll be highly competitive against venture returns over time. But this we have no idea what our returns are going to be, and nobody really does.
Mm-hmm.
But it's so we'll see. But we're very confident in this industry, and
Mm-hmm.
and there's a lot of growth that we could see coming from it.
So with any of this, you talked about a decade of investing. Obviously, there has to be an exit at some point. Do you see the public markets as your primary exit on most of these ventures, or are the public markets still not the best place for these investments to find their final liquidity? Meaning, it seems to me like some of the first blockchain / Bitcoin companies that went public, many of which are miners, right, have been punished pretty aggressively in the public market relative to what we might perceive their value to be as a Bitcoiner, with how much Bitcoin they have on the balance sheet, et cetera. So how are you looking at that? Like, do you see a lot of the companies you're investing in staying private for a long period of time? Or do you see the change in interest rates creating a better environment for public markets? Or what are your thoughts?
Yeah, it's interesting. It depends on the scale that some of these businesses can get to, and whether or not they want to seek that. But we do expect like the majority of the investments we're making will be monetized through acquisition over time.
Okay,
Yeah.
interesting. So a lot of consolidation in the future for the Bitcoin economy, potentially.
Yeah.
Like wrapping up all these little
definitely see that,
specialties into like one big financial services organization that's built around Bitcoin.
Right. Yeah. Paul, sorry, I actually got to jump here pretty quick.
Not a problem.
Yeah.
All right, but final thoughts. Let's maybe tell people where they can find more information about you, about your fund, and so that they can get in touch with you should they want to.
You can get in touch with me at epochvc.io. That's epochvc.io. You can contact us through there. Have some of our writing on there. I have my book up there. Just go check that out, and check me out on Twitter. I'm on that as well.
Awesome. Guys, like and subscribe so you can get more great content like this. Eric, thank you so much for spending over an hour with us today. We love what you're doing, and we hope to hear more from you in the future.
Yeah, thanks for having me, Paul. This was fun.
All right, buddy. Thanks a lot.
All right, see ya.
Bye-bye. Thanks, man. That was great. Sorry to tie you up for so long.
No worries. Sorry. Yeah, I just I got to jump onto this next call, but thanks a lot, man. I appreciate you having me on, and
yeah, my pleasure.
Yeah, let me know when it's coming out, and I'll
yeah, we're gonna record a few more. We're kind of stockpiling an inventory of interviews before we just start pumping them out, so that we never, if we miss a week, we don't get behind. So probably within 2 weeks, we'll start releasing these recordings.
Awesome. All right. Thanks, man.
Thanks, brother. Take care.